Good morning. Few others are joining. Any questions to discuss from the last session? Area. No question. Guys, anything to discuss from previous discussion? Who are joining it remotely? No? No question. Yeah. Well, I think. Good morning again. We are discussing the taxable income. Taxable income of a person. Right? So, taxable income, under that taxable income. Second source of income, business income, right? So under the business income, we have already discussed some things that need to be included. And we work out the taxable income from business. Now we are discussing what the thing we cannot consider. We need to give special attention. Right, under that, we discussed three parts. So how we can make the deduction when we work out the taxable income from business. So that we discussed section 10. General deduction, right? At that particular section, says even though it is under general deduction, nothing we can deduct under any category of expenditure which is covered by section 10, right? So for calculation purpose, we call it allowable expenditure. So thereafter we discuss section 11. That is main deduction. And the main deduction, it says expenditure to the extent that regarding the production of income during the year, we can deduct. Thereafter it says no expenditure can be deducted which are in the nature of capital. Capital nature expenditures are not allowable. Right? Thereafter we discuss section 12 to section 14 we have already discussed. Right? Right. That these particular sections especially tells us what type of expenditure we can deduct and is there any limitation for the deduction. Actually, first thing we have to check whether particular expenditure can be deducted under section 11. That means under main deduction section. If it is permitted, then balance sections will be applicable. As well as this particular expense, for the section say some part of expenditure that is also not deductible, not allowable to deduct. Right? So under that we have discussed section 12. This is about the interest cost, how we can deduct. That is actually interest cost. Interest cost says in calculating the business or investment income, we can deduct interest cost, but there are some limitations of the criteria that need to be satisfied. So particular borrowing shall be used to purchase or acquire an asset. Assets shall be used in the business during the year in the production of income. In such case, that particular expenditure we can claim. Second thing is that particular borrowing shall be used during the year for the production of income. It is the case, interest cost can be deducted. So thereafter, other section is linked to the section where it says when we are deducting interest cost, when we are deducting finance cost, it is called finance cost. From the allowable finance cost, there is a maximum limitation to deduct per year that is applicable only for company. Right? We call thin capitalization rule. And there is no word in that thin capitalization, but that says maximum amount to be deducted. That particular year. So first thing, in case of interest income, all the criteria on section 12 need to be satisfied. If it is the case for a company, there will be a maximum limitation for a year. Then excess thing that can be carried forward and subject to the same limitation we can deduct. Right? So that is section 12 and 18. Then we discuss section 13. Allowance for trading stock. Right? Then we discuss section 16, capital allowances. So as we discussed under the section 11, subsection 2 says that we cannot deduct capital expenditure, but under section 16 says we can claim capital allowances. That is depreciable asset used in the business depreciable assets used in the business. For such assets, we can claim capital allowances. It says assets should be used in the business during the year and it should be there at the year end. In such case, we can claim capital allowances. So capital allowances says basket of asset. If describe what type of asset which qualify for depreciation allowances or the capital allowances, right? And the number of years, how we can claim that one. Right? Remember, this will be testable area, right? Basically, all those things are testable area, but if any computation, the adjustment for this type of thing should be there in case of the business income, because you know that in all the business they are using capital asset, so therefore, so capital allowance will be applicable, right? So that is section 16. So another this is actually the section 16 says capital allowances and balancing allowances we can deduct, and also it says as per the schedule. So thereafter it says schedule 4, and thereafter it says capital allowance on the schedule 2 also we can claim. Right? 2 says, but that is for the capital allowance which is given as investment incentives. So we call enhanced capital allowance. Enhanced capital allowance. That is applicable for investment other than expansion of existing business. Right? So given some criteria, there is the investment criteria, right, that need to be satisfied, as well as the area where that particular investment is made. Based on that thing, enhanced capital allowance can be deductible. Right? That is investment incentive. Additional incentive for businesses. Right? But the intention is to encourage the investment. Right? So that is enhanced capital allowance. And apparently there was an amendment to that section and that schedule and says even though we were undertaking for the business which is approved by the Board of Investment of Sri Lanka is also entitled to enhanced capital allowances even in an expansion of the existing business. Even expansion of investment existing business we are undertaking. I am trying to get the enhanced capital allowances. Right? So we don't think you should have good understanding. Thereafter, balancing allowances. So balancing allowances is given for depreciable asset or the assets which already capital allowances claimed and transfer the disposal in a particular during your investment, we have to work out the balancing allowance, right? As well as says in case of the disposal for the transfer abandoned, so then we have to work out balancing allowances or other word accessible charges. So if the written down value is excessive compared to the disposal proceed, we call it capital balancing allowance. In case of the disposal proceed is excessive compared to the written down value, that we call accessible charges. Further assessing that amount, right? Therefore, when we work out the business income, so under section 10, it says no deduction is allowed for provision. Therefore, depreciation provision made to the financial statement as per the accounting recording framework is not deductible, but capital losses we can claim. As well as profit or the loss recognized the financial statement as per the financial accounting terminology. That is also not considered. And we have to work out balancing and also assessment charges. Accordingly, we have to do the adjustment. Right? Right. That is section 16. Thereafter, we have discussed section 14. Right? Section 14 says repair or improvement cost. Right? This section says even we can deduct capital expenditure. Remember, section 11 says we cannot deduct capital expenditure, but section 14 says we can deduct capital expenditure as well under this particular section. Right? First thing that need to be satisfied the criteria which is specified under the section 11 that particular expenditure shall be incurred in the production of income. Right? So you know that repair and improvement cost that shall be incurred for the depreciable asset. Right? Depreciable asset which is used in the business. In such case, we can claim, we can deduct repair and improvement even though that is in the nature of capital expenditure, including capital expenditure. Right? So the particular section says in case of the repair, there is no requisition. We can deduct entire thing. That is repair. In case of the improvement, it says there is a maximum limit. For a year. That is applicable for improvement. Only improvement cost. Right? It is applicable only for improvement cost. Right? So then repair and maintenance both are very similar. Repair and maintenance both are very similar. That is not in nature of the capital. So we can deduct. Right? So improvement cost more is towards to capital expenditure. Even though it is capital expenditure, we can claim for tax purpose as a deductible expenditure, but there is a maximum limitation. It says, what is the maximum limitation? Can anybody tell me? Who was there in the last discussion? How we should work out that? Can you tell me what's the limitation? How we have to work out? Sorry, 10%, 5%, 1. Yeah. So it prevented actually based on the asset which classified under section 16 for capital allowances. So under section 16, there are 6 classes of assets. Right? Class of asset or the category of assets. Based on the category, that limitation is coming. It says building structure similar nature work. In such any improvement cost related to such assets shall be how much? 5% of the written down value as of previous year, at the end of the previous year. That's the maximum amount what we can claim in this particular year. Say in 2023, so 22, 23, on that written down value, we have to get the return as of the end of the 22, 23. Based on that, the limitation is we have to work out. Right? That is the maximum amount that can be deductible for particular year. In class 2 assets, so the building structure is 5%. The yeah. Any other class of asset? 20%. If there is an excess amount, so the any amount excess of the maximum limitation, what we can do? Nothing. Sorry. We can do for that excess amount, for the unabsorbed, for the unclaimed amount. That can be added to the written down value at the end of this year. Right? That is why the section 16 capital allowance says the basis for the capital allowance is depreciation basis. Right? So we have to add to that depreciation basis that excess amount. Right? If there is no written down value in the last year, end of the last year, what could be the treatment? So in case of the class 4, the building structure similar nature work for a period of 12 years on a straight line basis we can deduct. In case of the other assets, over a period of 3 years, we can deduct. Right? That is repair and improvement cost. Remember again, I am repeating that there is no restriction for repair and improvement, but repair cost, improvement cost, there is. We cannot claim entire thing, so there is a limitation. Right? That is depend on the class of asset. Right? Which categorized as per the for the purpose of capital allowance. Clear? Right. I think that point we have covered. Okay. So any question? Yeah, question? Any question? 2? No. No. Yeah. Then Charlie. Charlie, move to today's discussion. Right. So section 15. Section 15 talks about the research and development expenses and agricultural and startup expenses. Right? Research and development expenditure and agricultural startup expenses. Right? It says research and development expenses and agricultural startup expenses may be deducted irrespective of whether they are of capital nature or not. This section also talks about we can deduct capital nature expenditure. We can deduct capital nature expenditure. Right? It says research and development expenses and agricultural startup expenses may be deducted irrespective of whether they are of capital nature or not. That means even though capital nature expenditure, which is coming under research and development or agricultural startup expenses, we can deduct. Right? So if therefore it says what is agricultural startup expenses for this purpose? Right? You know that in the agricultural undertaking. So if normally initially we have to incur some cost. Initially we have to incur some cost, and that's the substantial period takes to produce income. That is inherited to that particular industry. Right? So they say we are going to start up a plantation, which is say tea plantation. Day 1 onwards, we didn't give the return from that investment. So if we start a grocery shop or the shopping mall, so from the day 1 we started the business, we are getting the income. Right? So therefore, that in the agricultural industry that is inherited, that there is a substantial period we to get return from or the earned income from that particular business. Right? So you know that under section 11 or the main deduction says expenditure incurred in the production of income during the year we can deduct. Right? Expenditure incurred in the production of income during the year we can deduct. Right? So then there should be some sort of earnings due to claim expenditure. Right? That means that particular expenditure is generating income. So in such case, we can deduct that expenditure. That is section 11 under the main deduction. Right? So then this type of expenditure, this type of industry have an issue that because as I mentioned that so expenditure right now we are incurring, but there is no return then and there. Take some time. So then they cannot deduct that expenditure. Right? As for the tax purpose. If we work out the assessable income, we cannot deduct. So therefore this section says agricultural startup expenditure. We can deduct. Right? We can deduct even though they are capital gain. And you may know that. So some sort of expenditure which are being incurred in agricultural industry is capital nature. So we have to prepare land, we have to purchase by the plants, right? We have to maintain the land, right? The area where we cultivate. So therefore, it gives a return over a period of time. So section 11 again says any expenditure which you return more than 12 months period shall be categorized as capital nature. So again there is a restriction when we claim the expenditure which we incur in this type of industry. Therefore it says even capital nature expenditure we can deduct. Right? So what is the agricultural startup expense? So that is as per the law. That means expenses incurred by the person in opening up any land for cultivation or for animal husbandry. So that means prepare the land for the cultivation or animal husbandry. We can deduct. You know that we have to clean the land, and sometimes we have to set up a fence or drainage system. Right? We have to invest on that type of activity. So most of expenditure. So once we set up that wall or the fence around the land, it has more than 1 or 2 year lifetime. Right? So drainage system also same. You know that in where we have that tea plantation, sometimes that drainage system is over a period of the entire lifetime. Right? So that this says opening up any land for cultivation. So they set up the land or they prepare the land for the cultivation or animal husbandry. Right? So cultivating land with plants. You know that once we clear the land and we have to set up the whole land everything and we have to plant the plant and thereafter we have to look after that plant. Fertilizing, weeding. So for that, so then that particular expenditure also we can deduct. Cultivating land is plant. Right? So thereafter it says the purchase of livestock or poultry to be reared on land. So initial cost for the acquisition of livestock, right? Or poultry to be reared on the land. Or maintaining tanks or ponds, or the cleaning or preparation of any inland waters for the rearing fish and the purchase of fish to be reared in such tank, pond or inland waters. That is also deductible. Right? Fishing, inland water fishing industry. Right? That is the item that we can deduct under this agricultural startup expense. Okay? So then we can deduct that particular expenditure. So what is called research and development? You know that in research and development also, research and development we are it's coming with a novelty or new thing, innovation. So we have to do some sort of research, right? So the research is done for this one particular year, but there is no assurance that we are getting income, right? Just having a research, done a research, it doesn't mean we are getting a revenue or it's supposed to earn revenues, right? So then again that question is coming as per the section 11. So the main deduction says you to deduct that expenditure, it should be incurred in the production of income. There should be income generation from that because of that expenditure. But we cannot link research and development expenditure with the revenue. There is no relationship. We cannot establish a relationship. How much you have incurred, how much we earn. So then again the question of that whether that particular expenditure we can deduct. And also if we do a research or the development, so then that particular expenditure will give return for a company, or the say if it is a success thing, give return for a company or the industry or the business for a period of more than 12 months. Then again it falls under the capital nature expenditure. Therefore, again there is a restriction as per the general deduction, sorry, not general deduction, main deduction. So capital nature expenditure again we cannot deduct. So therefore, this section says, section 15 says, research and development expenses means expenses incurred by that person. So again, the section 15 is that even though capital nature expenditure we can deduct. right? Other thing is, we can do a research or the development, right? But it may not success, right? We have to give up that project. So even though that is there, that it is not necessary to generate income, we can claim that one. Right? It says means expenses incurred by the person in carrying on any scientific, industrial, agricultural, or any other research or the upgrading of a person's business through any institution in Sri Lanka. Any institution in Sri Lanka. Right? It says carrying on any scientific, industrial, agricultural, or any other research. You know that in Sri Lanka we have so many agricultural institute, research institute. They are developing some new agricultural produce. Right? So we have that we have candy. What is that? Yeah, all what is that? They are developing some sort of a new agricultural seed plants and everything. Right? They give more out. Right? So that institute is somebody is doing the project with them, and they are incurring cost. So that particular expertise they can say without. Even some universities, they do some research, right? So you know that in case of universities and all those things, they don't have any fund. So therefore, somebody can join with them and they can get their services to develop their business or their product. So then that particular expenditure is allowed under this section. So research and development expenses. So this type of scientific, industrial, agricultural, any other research for the upgrading of the person's business through any institution in Sri Lanka, or for any innovation or research related to high value agricultural produce by the person or through any research institution in Sri Lanka, right? They can deduct it. Or the process of developing the person's business and improving business product or process. So unless this tax law is in the economic policy, right? Country's economic policy. You know that still we are developing country. Right, so the to expand the economy, it is important to go with the innovation, right? That is policy, right? You know that in the developed countries they are come with a new thing, novelty, always, right? So even Europe or the Asian some countries, they are coming with innovation. That's why that's how they have achieved what is this development. So therefore, in our government also thinks that yes, it is important to have research and development in case of the businesses, right? So from that it will support to development the economy. Therefore, as an economic policy, they have taken this type of decision, right? So that is included to the tax policy as well. It should be always in line with both, right? So that's why the other thing is we are feel that agricultural based economy we have. So that's why agriculture they have given some special place for the agricultural industry. So not only this, other section also they talks about the agricultural industry, right? That is tax law, right? As for the tax law, they are given some sort of facilitate to this type of encourage this type of activities, right? As I told you, that's what the enhanced capital allowance also came introduced, right? Right. The second thing is the process of developing the person's business and improving business product or process, right? Which shall be beneficial to the Sri Lanka, but shall exclude expenses incurred that are otherwise including the cost of an asset. Which says, in case of the research and development, this type of activity can be done. In case of the process development, that can be research, this is development part, the process of developing the person research, any process improvement, development. The cost incurred by the particular person can be done. Should be into the business or the product, both, or process aspect, product, or process. The we have said we are a manufacturing company. So manufacturing process, they are introducing new process. You know that in case of the some institute, they are giving some. So Boston consultancy, that type of organization worldwide, they are giving some sort of new the idea. So they are introducing new process, right? How to increase the value chain or the value. What is that? Michael Porter's came with new the value chain model, right? Likewise, he can come with the process improvement. So if somebody is investing on that type of activity, so they can claim that particular expenditure, even that is also in the nature of capital nature expenditure, right? It says again that which shall be beneficial to Sri Lanka, but shall exclude expenditure incurred that are otherwise included in the cost of assets. That first thing, it should be beneficial to Sri Lanka. That's what I mentioned, that it should be give some benefit to our economy, right? So it says shall exclude. That means this type of thing we cannot deduct, but in that incurred that are otherwise included in the cost of an asset. Say, so in the process development, the research, the research project, we have already invested in purchasing some assets. So that asset we cannot include here. That is the meaning. That asset we can deduct, we cannot deduct. Says we shall be beneficial to Sri Lanka, but shall exclude expenses incurred that are otherwise included in the cost of an asset. So then we have recognized assets separately. Obviously, we can claim the capital allowance. So that's the meaning, right? So you know that. So we are going to set up a research unit. So then with some institute, right? So we put up a building lab, research lab. So building is part of cost of an asset. Shall be considered separately. Okay? Clear? That clear? Right. So another one says marketing and communication expenditure. In calculating personal income. So remember here the research and development, it says what type of research we can consider. So marketing research is not there. Only product development or process innovation or whatever thing. That type of research. Says what is scientific, industrial, agricultural, or any other. For the upgrading of this person's business to an institution in Sri Lanka. So therefore, that part is addressed under this section. It says marketing and communication expenditure. So what is the meaning of marketing expenditure, or the promotion expenditure, or the advertisement expenditure? Tell me what is the advertisement expenditure? What do you mean by advertisement? It's not tax. Just take time. Give me the interpretation for the advertisement or the marketing or the promotion expenditure. Can I call somebody in front of this thing and already you are comfortable in that particular seat and tell me? What do you mean by advertisement expenditure? Okay, good. So then, can I ask question? One question. Say, in our organization, we need to recruit some staff, right? So then we put a advertisement in newspaper or the media. Is it coming under the advertisement expenditure? You know that we have to put some advertisement, right? Vacancies, the top jobs or whatever. It's not part of advertisement expenditure. No. It is.
Marketing. It is advertisement, but not marketing.
Advertisement, not marketing. So we are going to sell our assets which are used in the business, which were used in the business. So we put some advertisement. What is the category of that expenditure? But since that what the interpretation for that thing is correct. It says it's advertisement why we are breaking in case of the business. So make aware the other about our product or service. What we offer. And remember when you are working as an accountant, so advertisement expenditure for the business purpose is make aware others about what you are offering to the society. So advertisement, what I mentioned as second thing, when the staff recruitment, it is actually not advertisement. It is HR related cost, the recruitment cost. Shall we categorize as recruitment? Right. So then promotion expenditure. That is also for the expansion of the market. Okay. Attract some market where you have not yet explore in the existing market. Right? You do. You know that in case of this soaps and all those things, they are telling that if you are buying one or the two or the one get free or right back, that is goes as promotion. Right? So in this case, it says communication exchange. That is what. There is marketing and communication exchange. So here it doesn't say it's advertising, marketing and communication exchange. What is the communication? General. Communicating expenditure. So here, remember, so this is not using as the general meaning in terms of communication. So you know that in telephone and internet and everything is coming under the communication. But it is not the case here. It is always about the communicating product or the services to society. That type of expenditure covered here. Right? So then that type, but I know that say telephone or the internet or that type of expenditure, that is anyway incurred in the, if it is incurred in the production of income, so you can deduct. Right? No need to separate it. So here, reason is that I told you that previously also. So this marketing and advertisement type expenditure we incur right now, and we cannot relate that particular expenditure how much that contribute to the earning income, and also we cannot limit for a particular year. So today we do marketing program. If the income may be coming over 10 or the 5 years, 2 years, whatever. Right? We cannot say. Also, there is no guarantee how much we earn from that particular expenditure. So then again, that question is coming whether it is coming under the capital nature or whether can it be deducted, saying that under section 11 or the main deduction, the main deduction incurred in the production of income. So say we do advertisement, nothing has come. Right? So irrespective of that, that is also says again, in calculating the income from a business, that is also business, Marketing and communication expenses incurred by such person in the production of income during the year of assessment shall be deducted irrespective of whether they are of a capital nature or not. Again, that these type of expenditure can be done. Right? You know that some companies they are putting that these BT boards on land. Right? That is also part of advertisement, right? So, and it's not more or less revenue nature expenditure. It goes to capital nature expenditure. You know that in the name boards and everything, right? So, but here it says even capital nature expenditure you can do. So, marketing and communication expenses means, says means. You know that in taxation, when we interpret something itself, two types of interpretation, inclusive and exclusive. But this says means exclusively these things. Inclusive interpretation says 1, 2, 3, 4. That's all. Includes means give some area which you can put it to that particular area. If it is the case, yes, it is covered by that particular interpretation. Right? It says means carrying out a marketing research. The marketing research coming here. Right? So you know that. So before we establish or the introduce or the introduce a new or the launch a new product, we can do a research, market research. Right? What is this type of thing? What the requirement of this type of thing? What the market we need to be addressed? So we can analyze the market age with the age or the gender, what the geographical things. Right? So then carrying out a marketing research by such person or any institution in Sri Lanka on his behalf. Right? Even though it's done by the same person or through an institution, so that is allowable, but it's the institution in Sri Lanka. In Sri Lanka. Right? The development or production of marketing, advertisement, advertising, and communication campaign to the extent that such development and production is carried out in Sri Lanka. That means marketing, advertisement, and communication campaign that need to be done or the program need to be developed in Sri Lanka. Advertising on mainstream media or social media, including television, radio, print, as outdoor advertisement. You know that in the hoarding and boarding and all those things in the road. So as I mentioned, the BT boards, digital boards, right? So screens, that type of thing. Even general media and social media, right? Television, radio, print, or outdoor advertisement, product launch or campaign activation carried out by such person or by any local institution on his behalf. That product launch of when they are launching or they can campaign for the product launching, that particular expenditure we can deduct. Right? And developing any and printing of point of sale material by such person or by any local institution on his behalf. You know that material, paper cuts and all those things they are distributing and bills, that type. In other supermarket when you are coming into the seller, they are giving some sort of at the booklet. What are the discounts they are offering and what type of the items are there? That is also that point of sale item. Right? That is also deductible. Right? Right. This is section 17, so then finish all the special area what we need to discuss. It says for the purpose of calculating personal income from a business for a year of assessment, a loss of a person from the realization during the year of assessment and liability shall be deducted. So previously under section 16 we discussed that depreciable assets used in the business. In such depreciable assets, at the point of disposal, if there are any gain or the gain or the loss, we have to work separately, or the main tax arrangement needs to be done separately. We call it balancing loss of assessable charges. So here again says, for the purpose of calculating a person's income from a business for a year and the loss of a person from the realization during the year, assets and liabilities, even liabilities. I mean, honestly, liability, there is no realization liability. So at the settlement of liability, if there are any losses, it shall be deducted. So example for the liability losses on the settlement of liability. So say we have obtained a banking facility, right? So if there are any at the settlement, you know that early settlement we have to pay additional cost. That type of thing. Let's say they are doing okay 1%, we have to pay additional 1%. We are going for an early settlement. Or sometimes if there is delay, you have to pay additional thing. That type of cost, that is deducted, that is loss, that can be done. Right? The assets and liabilities are capital assets of a business. You know that in case of the assets, anyway, we know how to work out in case of the depreciable asset, how to work out the super charges for balancing allowance. So other assets also, capital assets of business to the extent to which the assets were used in the production of income from the business. It stays in that way. Right? Asset which has been used in the business and in the course of production of income. And liabilities of business to the extent to which, in the case of a liability, that is a debt obligation incurred in borrowing money, the money was used or and assets purchased if the money goes used in the production of income from the business. Same criteria we have learned earlier also. It says so particular borrowing that need to be used for the purchase of an asset or otherwise money used in the production of income. So in all other cases, it says in the case of any other liability, the liability was incurred in the production of income from the business, just like say trade debtor, creditors. So if they are asking additional thing, so based on the delay payment or whatever thing, right? You know that what the liability for the creditors, whatever we purchase from them, and then there will be credit balance, right? So then we have to pay and finish. So if they are asking additional thing, then there will be a cost. So if you are delaying payment, then we have to pay another 2% or 3% on that. There will be a cost. That particular cost also deductible. Says what is that? It is incurred in the production of income. Right? Yeah. So with that, I mean the asset liabilities is capital assets. We learn separately under the investment income what is capital asset. That's a definition in that what is capital asset. Right? So it says these type of assets are capital assets. So it's again it starts from what is investment asset. It says investment assets comprise with capital asset. Then it says what is capital assets. So even capital assets here, remember capital assets of a business. Business to the extent to which the assets were used in the production of income from the business. Right? Clear? Any question? Very good. Asking question, right? I don't know other lectures. I am asking question. If you are able to answer, you say. Right? So therefore, it's better way to that's what I mentioned in the first year also. It should be a dialogue and a discussion. Okay, one way lecture. And you can ask questions because not like just other university lectures. I'm also encouraging you to ask questions. It's how to there is a benefit to both parts. So my end as well as your end. You can't sort out your questions even in your coming from your employment or wherever if you are doing business from that. Other side also, I also thinking in a wider way when we are asking question. Another for me, so I can assess your knowledge. To what level you have get that knowledge from the lecture. How far you have to work to get that entire knowledge regarding taxation. Therefore, please ask question. Right? Is that clear? So then losses. In calculating income of a person from a business for a year of expense, the following shall be deducted. It is deducted. An unrelieved loss of a person for the year from any other business. Right? So I will say particular business have a loss, then there won't be assessable income. If there any other business, then loss incurred by that particular person from any other business. That loss also can be deducted from a business. Remember, you work out the assessable income, right? Assessable income. I am going again to the previous discussion. Assessable income. Assessable income says assessable income would be from sources, right? Employment, electricity, business, investment, and other source. Right? We are discussing here employment income, but I'm asking some question to you to express that knowledge, right? So then business income. And the business income, so all the business income come. Could be 1, 2, 3, whatever business. You have 100 business, but in this particular case, you have only one business, one source. That is business. So for the tax point of view, we are working out only for these 4 investment sources, income sources. Right? So we call that dominant principle. So whatever income we are having, first we check whether the attributes of the employment income is there. If it is the case, then we have to work out that particular income as per the guideline to taxpayer for the person as per the tax law, how to work out the employment income. Accordingly, we have to work. So if that then if it is satisfy that criteria, then we are working out there and finish that. So if it is not the case, then again we are checking whether that particular income coming under business. Also, what the conditions satisfy or the criteria or the attributes are there, which is like that, which is falling under the business. If it is the case, yes, we have to work out under that. Right? If not, then we check whether it is falling under the investment category. If yes, then we are working on it. Okay. So basically, up to these 3, in Sri Lankan country, whatever income is covered. But there is another section called other source. Any income which is not falling under this three category, we check whether it is coming under this fourth category. Right? That's what. So you know that in now day-to-day life, we are calling that sometimes somebody is going for the job. Right? So, but for the tax point of view, we are calling employment income. Right? So it says what is employment income? It says then what is employer and employee. Right? If it is under that category, we are working out the income as per the guideline given for that. Right? You remember that section 10 says any expenditure we cannot deduct it when we ascertain the employment income. We cannot deduct any expenditure when we work out the employment income. Expenditure can be deducted when we work out the business or investment income. Says again business or investment. Right? Therefore, that say you know that some independent personal services, just like you know that say carpenter is he coming under the employment or business? Carpenter. Which category is coming? Business income. Why? Sorry? Employment. I told you that he is an independent person, so he do independent person activity or service. Right? You know that say in some cases we have to get a service for carpenter. He is coming and he is doing that work and he is going take that money and he is coming to the come for active time or do that active time or the complete the job as actually then finish and then he take the money and then he go. Is it coming under the employment or any other category? Self-employed. Oh, tax point of view.
That's a guarantee about like employment.
Yeah, what is the difference between? What is the difference? Tell me. You should know, right? I mean, teach you what is that the employment income, but you should know. I have a contract. Is that the case? So I mean, say I am getting a carpenter service, so I there are some agreement, right, between the carpenter and I'm telling, okay, I need to finish this part. How much you are charging? He's telling, okay, this is okay. What's the duration you can take for this? That's a, I mean, that may not be necessary in writing, but there's an agreement, right, between that part. I'm correct, right? I think you learn something about the law, so contract law.
Business.
Business. Why you are taking?
Because he is incurring expenses on those assignments, whichever that he took on. So to deduct that expenses,
He is incurring expenses means?
if he get a job,
Okay, so then volume, right? So I am providing all the materials.
sorry,
I am providing all the materials to do that. Hey, I will put up a also whatever thing. So then I am giving, okay, I will give this thing. You do that part. So I'm the basically raw material I am providing. Tell me. Oh. Difference between that and you know that right? You know that what is this සිංහල අවුරුද්දට තියෙන්නේ අවුරුද්දේ නැකත් තියෙනවා නේද? මේකද මොකක්ද කියන්නේ? එක දැනන්නේ කොහොමද? The British time was both in Singhala New Year and New Year Sunday. But the most important නැකද? පාරලයි. කොහොමද කියන්නේ? නැකතට කඩ කියලාද කියන්නේ? කොහොමද කියන්නේ? නැකතට කැවුත් ආවද එතකොට කන්න වෙනාද කියලා. ගණදෙන්න කර වඩාලා ආහාර අනුභවනේ වෙනවි කියන්නේ. එලාම ගණදෙන්න කරලා වඩාලන්නේ. ඒකෙම දින තායක රැකී ආරක්ෂා සඳහා පිළිත් වීම නැකතක් තියෙනවා මේක. එතන දින වචන රැකී ආරක්ෂා. ආරක්ෂාවක්. So in a real sense, in after the tax law, so the rakia, the single term rakia is called vocation, right? Right, vocation. So this type of thing coming, the carpenters, technical person say I want to, I want to repair my motor car. So then I have to go to the person who is doing that mechanical person, right? You do that type of service, right? So then I have to get their service, right? So difference between, there are so many differences, like criteria. So you do decide whether it is coming under the employment or the vocation. So remember when we learned this lesson, right? I told you it's very important. Business includes inclusive definition. Businesses include a trade, profession, vocation. Okay, yes, there is a contract. So two types of things: contract for and contract of. And employment also we have a contract. And vocation and professional services, that is also have a contract. But these terms are different. You know, the first example, say carpenter case, he is not bound to do his services only for me. Right? In the road, when he comes to my place, he finds another place, he is going to that place. There is a contract, but there is no restriction to do another activity, civil activity. But most of employment case, you have a contract that you can do your services only for that particular employer. Right? All the terms and conditions are as per employer. You cannot put terms to the employer. That is the general thing. Right? In the carpenter case, today he is coming, tomorrow he is telling that today I can't come, I have another work. But as per the contract, he has to finish my work, even working day, night, or whatever. I am not bothering about it. Right? In case of the employment, we have agreement. Okay, this is the time of work. Official. 8 to 5 or the 9 to 5 or 9 to 5:30, we are working till midnight. That's something else. But as per the contract, it is specified how many hours per week, total number of days, or whatever thing is there. Right? And also, in case of the employment arrangement, all the facilities is provided by the employer. The vocation or the professional services. So they are coming with that all the equipment what he need to perform his duty is taken from his side. I'm not providing. Right? In your case, say you are going for a work you have a contract, employment contract. So employee is providing all the computers, whatever thing he is providing. Right? Papers, pen, and all the auditor වෙන කාලෙන් පෑනකුත් දෙනවා මාසෙකට දෙකක් තුනක් දෙනවා පැන්සලකුත් දෙනවා මකණේකුත් දෙනවා රතු පෑනයි නිල් පෑනයි කොළ පාට පෑනයි හැම මොකක් හරි දෙනවා ටෙස්ට් කරන්න ඉතින් right now we have that the computer is not so they are providing a what is lab. So if you are doing a freelance or the thing say practice, then you have to buy a laptop, you have to invest in assets, right? Duration likewise there are some differences. The important point is, in case of the business, they are always working for profit. Okay. Intention of the entering agreement or the contract earning profit. Right? Therefore, there is a big difference between the employment and vocation and profession also. Right? So, vocation, I told you that type of thing. So, he has the experience, knowledge, technical knowledge, something, that type of thing. In case of profession, they have a profession membership with the professional, or the well-established or the reputed professional institution, just like doctors. Tell me anybody is going to any person who doesn't have a BBS qualification when you are getting that medical treatment. Doctor they are not going. But the institution can give an reputation for that particular member. He has that quality of that service. Right? Therefore, these type of things are coming under business income. That's what I want to highlight. So, in case of the income tax purpose, only 4 sources. I give that example when we discuss this thing. If somebody, doctor is working with the hospital, government hospital, and even if he coming for a channeling, then there will be difference between. For the government thing, he has a contract with the government. Who is the employer? Government is the employer. He is a government doctor. There is a terms and conditions. He has to go there. He has to visit the patient. He cannot charge from the person or the patient. But is any urgent matter, he has to go there. Channeling is not the case, right? We cannot do anything. Can we? We can do it. Only one go. We can go. Right? Yeah, that is the difference. Clear? So that is the difference between business and employment basically. Okay. Last area is there when we work on the business income or the investment income, so we can deduct losses. So it says that's what I mentioned. So we have if it says not particular business, any other business, loss from any other business, we can deduct. Only unrelated loss, that means the particular loss for the year, we can deduct from the business income from any other, or it says loss from a business may be deducted in calculation income from an unrelated loss from a business may be deducted in calculation income from an unrelated loss of a person for the year from any other business. Say I have two business. So I'm doing proprietorship. I have a hotel as well as I have a grocery shop. There's a profit in grocery shop. There's a loss in hotel. I can settle that. I can deduct. But because as I mentioned, I have only one source. That what is that? Business income. I have two business, but for the tax purpose, assessable income from business. We are not logging out the assessable income from each separate business, right? It says assessable income from business. Category wise we are working on, but is the source is assessable income from business function, right? So then in one business I have a profit, one business I have loss. Then I can deduct that loss from business where I have profit. Uneven loss of a person for any of the previous 6 years of assessment from the business or any other business. That means losses can be carried forward and can be claimed during over a period of 6 years. During that year, another 6 years. Right? Another 5. So altogether 6 years. We can deduct. The person may use the income calculating of the calculation in which any uneven loss or part of the loss is deducted. However, where a loss can be deducted, it shall be deducted. Right? So where a person makes a loss and if the loss were a profit, it will be taxed at a reduced rate. The loss shall be deducted only in calculating income tax at the same reduced rate, a lower reduced rate or exempt amount. If the loss were a profit and the profit would be exempt, the loss shall be deducted only in calculating exempt amount. Right? In the 2023, we don't have in case of the reduced rate, we have only one flat rate, but say from any other law, that particular business entitled tax at a reduced rate, such losses we can deduct as against the profit which is similar, which is taxed at similar rate. Right? Okay. If they are exempt loss, we can deduct only from exempt profit. Okay. Yeah. No. First thing, loss of a person for the year from any other business. Right? We can deduct. When we work out the business profit, loss from another business, we can deduct against the profit of the other business. Okay? Against the loss of the person from any other any of the previous 6 years, we can deduct. That means we can claim for over a period of that means carry forward and we can deduct. That means the person may choose the income. So he has to select the income from which where he is going to deduct that loss. For the part, however, if it is allowable, we can deduct. Where a person make a loss and if the loss were a profit, I have a business. That business is taxed at a reduced rate. In that particular business, I have a loss. It says, if the loss were a profit, it would be taxed at a reduced rate. Right now I have a loss. If there is a profit, it would be taxed at the reduced rate. loss shall be deducted only in calculating income tax at the same reduced rate. And that particular loss I can use to deduct. I can set off again the profit where the profit is also taxed at the same reduced rate. Right? A lower reduced rate or exempt amount. If the loss were a profit and the profit would be exempt, so I have a business, that particular income is exempt. I have a business, that particular income is exempt. So that business I am incurring a loss. Then that loss can be set off against the exempt income. Right? If the loss were a profit and the profit would be exempt, the loss shall be deducted only in calculating the exempt amount. Right? Is that clear? Right. In calculating income from an investment. So then investment income. So this is from the investment income. We discuss investment income next day. So it says loss treatment in case of the investment income. Unlevered loss from a business may be deducted in calculating income from an investment. So business loss can be deducted as against the investment income. Right? So I told you we have four sources: employment, business, investment, and other sources. If there is loss in business, we can set off against the investment income. Unrealized loss from an investment can be deducted only in calculating income from an investment. If there is loss from the investment, I can deduct that particular loss only from investment income. Directly it says investment losses cannot be set off against business income. Right? But first thing it says business losses. Business losses may be deducted in calculating investment income. Right? Directly says unrealized loss from an investment shall be deducted only within the 6 years of assessment, commencing on the first day of the year of assessment, immediately succeeds the year of assessment in which such losses were incurred. So that is also they have given another 6 years to set off. Again from the realization of an investment asset. Again from the realization of an investment asset. The investment asset shall not be reduced by any losses on the disposal of another investment asset by any loss. Right? We learned separately what is investment asset. It says gain from the realization of investment asset shall not be reduced by any losses. We cannot reduce by any losses or on the disposal of any investment asset by any loss. We cannot set off any losses as well as even though if that loss is coming from investment disposal of investment asset, we cannot set off that loss as well. Right? This is actually 2018, 19, and again they have introduced capital gain tax to Sri Lanka. So realization gain from the realization of investment asset subject to tax, which we call capital gain tax. Right? So when we work out the capital gain tax, so capital gain profit or the capital gain, we cannot deduct any losses. That's the meaning of that. Right? Any question? No question. Right? Losses in case of the business. If that loss is from lower rate, we can set off that lower rate losses against the similar rate, similar lower rate profit. Right? Losses from investment can be set off only from investment income. That is as per the tax rate given by the tax law. Schedule 1 says the tax rate, right? Right now we have only flat rate, that's 30%. But some maybe just like BOI undertaking, now still they can cut to the lower rate. Then look, that particular business is taxed at lower rate, but say if there is a loss, that loss can be set off as against a similar rate, profit from similar rate. No, not normal rate. Similar loss. That's right. Similar loss. It is. Right. Example say BOI undertaking, which was taxed at 15%. Right now they have a loss. That particular loss can be set off as against the similar lower rate. Profit from similar lower rate. So right now in Sri Lanka we have two rates, right? Normal rate and that is 30%. Other business we have 40%. So this is specific area. I mean the specific business activity, just like not just like actually this 40% is applicable for liquor, tobacco, betting and gaming. That type of business is taxed at 40%. Say we have a loss from this particular business, that loss cannot be set off against this one. Right? Yeah. Yeah, this is also same. Say profit is taxed at 15%, so that stand loss that cannot be set off against this. Right? So in case of the investment, if there any loss from investment, that loss can be set off only from investment. Yes? Loans can be set off against the gain from the realization of investment asset. Okay? Any question? Okay? Clear?
Behind? Manufacturing of liquor. Rất là dễ thấy đi bạn. Correct.
Sorry? That means the tax rate for the particular profit. Tax rate for the particular profit. Right now we have not discussed at that level. I'm going to say once we work out the taxable income, we have to apply the tax rate and work out the tax liability. At that time, what's the tax rate? Right, you know that intention was to work out the taxable income is to work out the tax liability. So how we work out the tax liability? Taxable income into rate. So that particular income, particular business income is liable for income tax at the reduced rate. So then is there any loss? That loss can be set off against the similar rate. Profit from similar rate. Right? Right. So it says if there any losses from the investor, that loss can be set off as against the investment income. Right? Is there any gain from the realization of investment assets? no losses can be set off from that particular gain. Okay. So we'll discuss this thing again when we are discussing the tax rate as well as when we are discussing investment income. So next topic is investment income. When we discuss the investment income, again I am talking about right there. Gain from the realization of investment assets. Right? So basically, right now you can write here that is capital gain tax. Actually. Right? When we work out the profit for the capital gain, or when we work out the capital gain, no losses can be set off against the capital gain. That is the objective. Clear? Have I answered your question? Pulwa. Yeah. No. No. If there are any losses from business, that can be set off against investment. No. Right? That's not a there's a restriction from this side. Investment losses cannot be set off against business income. That's the hiding factor. It doesn't say directly it's there. Business loss can be set off against investment income, but investment losses cannot be set off against business income. So actually, tax rate, when we are discussing tax rate, we have a special rate or general rate. Special rate, we have two parts, reduced rate and high rate. Right? This is coming under higher rate. Right now, for the year 23, 24, we don't have reduced rate as per the tax law. Previously, we had. Till 2022, we have, let's say, in the export profit as tax at 14%. Agriculture undertaking for processing part is tax at 14%. Likewise, we have tax rate. In the previous capital gain tax rate also 10% in case of the universe. Right now, for the company, 30% very equal to this. There is no different tax rate as per the tax law right now. Anybody in companies tax at 30%. But there is a provision for that BOI undertaking, which BOI companies which have obtained BOI approved prior to some period, and they are still continuing the reduced rate. They can apply the reduced rate. So they may come under this one. Right. That is not as per the income tax law. If any other law says that particular business is taxed at the reduced rate, then that can be considered. But therefore, this section is still valid. Because they also do rates. No, this is reduced rate compared to this. They are doing what is casino business. So I have another business. It could be taxed at 30%. My casino business taxed at 40%. If there is loss from this, I can set up again. There is loss from this, I can set up again the lower rate. That's not restriction. Restriction is this. That's not restriction for this. Right? Have to think that one. I told you was a restriction, but that means if there are any losses from this part, that can be utilized to set off Right? There's no restriction. Say business income, which is taxed at the normal rate or the higher rate. Right now we have a loss. That loss can be set off against the lower rating. There is no restriction in the law. Process other way.
Then there's a lower rate, we can associate with the higher rate, but it's the higher rate, we can associate with the lower rating.
When?
Forget the lower rate.
Align, right, Krishna? Align, right? So now, when we work out the assessable income, how we are working out? We are using one format. Remember, in the tax law, they have not given any format, right? So the computation purpose, I am using this type of format. This format we have plus side and minus side. Right? We are using the business profit or the profit as profit before tax as the financial statement. So that's what I told you. We are using the financial statement prepared as per general accepted financial the principle, accounting principle. That means as per the IFRS. Right? We are using profit before tax. Why I am using profit before tax? Section 10 says income tax cannot be deducted. Therefore, I am using the profit before tax. If you are using profit after tax, you have to add back the tax. Right? If it is profit, I put it on this side. If there is a loss, I put it to this side. Thereafter, in this particular profit, the accounting profit, there may be items which need to be considered as other part of income, other source of income. Just like say investment income, say other source of income. So then we have to take out that. Right? Intention is here to work out the assessable income from business. Right? So we are working out the assessable income from business. Say you know that in the financial statement, what type of income is there? Whatever income is to the business. Right? So you remember, so when you work out the business income, it says these type of things that need to be included. Realization of trading stock, the sales. These type of already considered in the financial state. Not only that, you know that other operating income also we are considering. Right? Finance income also we are separated, put it to there. Separate line item. So therefore, in the business profit, there may be elements which shall be categorized under the other source of income. Could be investment income. Simple example is we have a fixed deposit. The interest on fixed deposit we are taken to the financial statement for the comprehensive income under the finance income. For the tax point of view, it shall be part of investment income. It shall be part of investment income. Right? Therefore, we have to remove that one. Why? Here, our intention is to work out the assessable income from business. Right? Therefore, investment income. We have to take it out here, right? So I am reviewing other source of income. For example, say I'm doing a manufacturing business. Apparently, I have invested in share market, so I'm getting dividend. So dividend is not part of my business profit, but in my financial statement it is there. So the tax point of view, it is not part of business. So therefore, I have to take account of that. That doesn't mean that is exempt from tax. No, we have to separately work out investment income. From that point, I have to consider. Right? There are other sources of income which be there. I have to take account. I am putting to the minus side. Then in this particular business income, I am taking out the other source of income. So then that is not there right now. Right? Example. Also, in the income side, there may be item for the tax purpose. We have to separately work out. Simple example is disposal of depreciable asset. So then I have to do that adjustment as well. Then profit, I have to remove. There's loss, again I have to add back. Right? Thereafter, I have to check in the expense side, what are the things in there? You know that we have what the expenses we are charging to the trading account or the manufacturing account or the comprehensive income statement under the category of administration, establishment or whatever thing, and distribution and marketing expenditure and finance expenditure. So that category of expenditure I have analyzed. I have checked whether is there any disallowable thing. Example, say on administration cost or the manufacturing cost, there may be accounting depreciation. So I have to disallow. Disallow means that particular expenditure already deducted once I am working out the accounting profit. So therefore I have to add back that. Right? So other expenses that could be allowed. So then again I need not to deduct it. Why? Has already been deducted here. But there may be situation where for the tax purpose we can deduct additional thing. Simple example is enhanced capital allowances. It is not there in the financial statement, but we can deduct. So then we can put it to the deduction side, the minus side. Right? Clear? So difference between the plus and minus side is the assessable income from business. Difference is the assessable income. This is the format I am using when I am working on the assessable income from business. So we are using the profit before tax as it is. Thereafter, for the income side, there may be other source of income. So then I have to separate with these that one. But other source of income means investment or any other source. And also there may be tax, especially items that need to be considered for tax purpose. So I do that adjustment, right? So first I have to eliminate the accounting treatment, and thereafter I have to do the tax treatment, and thereafter I am going with the expenses side. So if any disallowable expenses there, I cannot anyway allow when I am working on the assessable income from business. So that particular expenditure that already has been deducted when we work on the profit before tax, therefore I have to add back definitely, right? If the tax those is specifically allowed, so then I can deduct, right? Another example I can say, what is that? Improvement cost, right? Improvement cost may be added to the or may be capitalized, but for the tax purpose we can deduct with the limitation. So difference between plus and minus side is the assessable income from this. The moment, but I mean, so whether you know the law or not, once you go with this format, the assessable income automatically comes. Right? I mean that how it says. So any expenditure if this allowed me, we have to add back. So once we add it here, so automatically tax adjustment is done. But you should know the item what we need to separately deal. Here and this. So here section 10 to 90. Basically this is source of income. And here section 16 maybe there. Right? So the capital allowances and the balancing allowance. Clear? Any question? No? Right? Do you need break or? Right, okay. We'll have a break and we'll start. Trustees, sir. Beneficiary. Trustees කියන්නේ trustee බලාගන්න. එයාට දෙන්නේ
එතකොට ඉතින් කොමිෂනස් එකේ ට්‍රස්ටි මාසිකන්ට බිස්නස් එකට කොමිෂන් දිනවා කියන්නේ ඒවල බිස්නස් වල තියෙන ටැක්ස් එකට ටැක්ස් එකයි ට්‍රස්ට් එකට ඒ
company rule trust
very much ownership ඉන්නේ ට්‍රස්ට් එක. එතකොට මේ
එතකොට company එකේ ownership එක කියන ෂෙයාර් දෙන්න यार बिजनेस प्रॉफिट के पास क्या कहना है डिविडेंड ड्यू दे रहे हैं इनका टैक्स है डिस्ट्रीब्यूशन है
रास्ते के काम वगैरह नहीं तो देते हैं तो लोग देना
नहीं इनको पता डिविडेंड इनकम में क्या ना एक विथोल्ड टैक्स होता है लायबल है ना विथोल्ड टैक्स से फाइन हमारा क्या टैक्स तो जानना है रीजन का डबल टैक्सेशन इन्वेट करना था यार कंपनी में ये आगे करना इवाग हम कंपनी के अथवा डबल टैक्सेशन करने के कंपनी का डिविडेंड डिस्ट्रीब्यूट करना क्या है आपको भी आफ्टर टैक्स में जाओ डिविडेंड डिस्ट्रीब्यूट आफ्टर टैक्स में ध्यान रखिए टैक्स क्यों लग रहा है एक ऐसा सामान ये भी ना आफ्टर टैक्स डिस्ट्रीब्यूट करो टैक्स है ना जब टैक्स है ना अप्लाई तो फाइन है टैक्स कंपनी क्या ना है ये हमारा स्ट्रक्चर क्या सब में करते हैं हमारे कोई apa ya bukan mereka mana itu pada gimana kayak bukan mekanisme dan sama lagi ya lagi ini itu company ini sih company ini kita tahu ada apa profit company so apa tradisi pakai dia itu yang naik kayak gimana company sekarang tahu itu but pasti kita harus beri tradisi company harus pasti kita itu pasti kita itu udah kan ini tax liability
trust in a percentage in the time so trading in the percent will give the
nah percentage yang kita sen mage business ke pamana stay kan kan boleh kan ada
trust kita main
trust dah manage kan ya ada responsible pandina
trust tax rate kita nas
tax trust tax rate මොකද මේ කියන ටෙස්ට් එකක් කියන්නේ මොනවා කියලාද යන්න මොනවා කියලාද කරන්නේ. ටෙස්ට් එකක් කරලා යන්නේ කැටි.
අපි මේ ඉතින් උනාට මේ මාර්ගයේ ටැක්ස් සිටිටි ගාලා නැහැ නේද?
Especially Colombo. They can use the charitable solution. Yeah, need the person to implement it. Well, charitable solution can be done. Other people charity activity. You know, charity activity. Yeah, it's like charitable solution. You got nothing to paling project kan transfer lagi tadi cost. Ya. Sama cost. Discourage that is right. First thing has been entered with internal explaining the connection with the skill or mechanical a skill district work. Rocket accelerator, this is the changes today I incorporate
These already came from. Good.
Comment करने को मैं स्टडी के पे आप एक
අපිට අර කරොත් නෝ itu di bawah dosen full itu sampai ini apa itu ini udah kita lihat finance hotel online kan namanya ini lecture namanya itu report Bomba, ya udah nih Pak. ඒක දාන්න මේ ලොකේෂන් එක බලන්න. ආ ඒක බලන්න. ඒක තමයි වෙලා ඉන්නේ. හරි. ඒක දැන් වෙන කාගේ දේවල්. Okay.
Subject questions you have to done. I uploaded a quiz. That is actually another reading material for the test what I am giving for a classroom. So, shall we read and answer the question? You can access to limit and extra answers in piece of paper. It's a MCQ. Take a blank page and put your number. Write the answer and give it to me. Since you are on remote, you also can work out. I think you can see the cues, right? Hello.
Yes, sir, you can see.
It's not a group presentation, a group discussion. Individual. Just like mock exam. Need more time? 10 minutes? Friday. Are you looking at that question? You mark that number, right? We must to you and mark that number, right? So it's 20 question. So just to revision on it, right? So you can take whether you are. Okay? Right? Can you look into the question? Right. Question number 1, according to the section 2 of the 11 Act number 24 2017, who shall be liable to Sri Lanka income tax? Individual who has only business investment or other income. Is that correct? No. Person who is having a taxable income or who receive a final withholding payment during the year. Yes. Company or trust which are having a taxable income for the year. Because it says one is non-resident individual who is receiving public income from Sri Lanka. So most appropriate answer is number 2, who receives who is having a taxable income of final withholding, who receives final withholding payment during the year. That's section 2. Okay, any question? No. Right. So question number 2, according to the section 69, so don't worry about the section, right? Section 69 of go to the 11 Act number 24 2017, company which shall be a resident person for Sri Lanka income tax. Foreign company registered in Sri Lanka. Only a limited liability company registered under the Companies Act number 7 of 2007. Company incorporated or formed under the law of Sri Lanka if the registered or visual office is in Sri Lanka or at any time, that it should be any time, during the year the management and control of the affairs of the company are exercised in Sri Lanka, local or foreign company registered in Sri Lanka. Correct answer is B. Yeah, B is correct. So next one is assessable income of a non-resident person shall be equal to any income derived from Sri Lanka, income from employment, business, investment, or other source for that year, to the extent that the income arises in or derived from a source in Sri Lanka, income from employment, business, investment, or other source for that year, wherever the source arises, only business income received or accrues to him from a source in Sri Lanka. Answer? Answer. 3. Income from employment, business, investment, or other source for that year, where the source arises. Answer. Then? What is the answer? 2. Because the question is about the non-resident. So in case of the non-resident, there should be a source in Sri Lanka. Right? 2 is the correct answer. Income from employment, business, investment, or other source for that year, to the extent that the income arises in or derived from a source in Sri Lanka. That's the correct answer. Right? So in case of the resident person, where the source arises. Okay? Correct definition for the period where income tax shall be calculated is any 12-month period. In the case of an individual, a period of 12 months commencing on the first day of the January and of any year and ending of the 31st day of the December in the same year. Every 3 months period commencing from April, July, and also in any calendar year. In the case of a person, a period of 12 months commencing on the first day of April of any year and ending on the 31st day of the March in the immediately succeeding year. That is the correct answer. Fourth one. Right? So for the on the same question, I mean the company or the trust can apply for a change the year. Only company and trust, not the individual, right? Person shall be liable for income tax. Who shall be considered as the person to Sri Lanka income tax purpose? An individual or entity and includes the body of person, corporate or unincorporated, and an government organization and charitable institution. An individual or company or body of person, corporate or unincorporated, and executive and government organization, charitable institution. An individual or a company. Yeah. An individual or a company, a registered club or association, an executive and non-government organization and charitable institution, a company, partnership, trust, corporate bodies, and non-government organization and charitable institution. So, who shall be considered as person? This one. First one. An individual or entity, and includes here body of person, corporate or unincorporated, and executive and non-government organization and charitable institution. First one is the correct one. The second thing is a company. Company is included after the entity. Entity has three parts: company, partnership, or trust. Then who shall be the same question, right? Right. What is the correct statement regarding taxable income? It aligns the taxable income for a year of investment, qualifying payments, and relief for that year shall be occurred. The taxable income for each person shall be determined separately. If there are no deductions for the qualifying payment and relief for that year, taxable income of a person for a year of assessment shall be equal to the total of the person's taxable income for the year for which each employment, business, investment, and other sources. The taxable income of each source shall be determined separately. What is the incorrect statement? What is the incorrect statement? What is the incorrect statement? Which one? First one. And a taxable income for year of qualifying payment and relief for that year shall be deducted. Correct. Which one? Yeah. See. Which one? Three. Three. It says taxable income. So taxable income means we have to first sort out the taxable income. Then we can deduct two items, that is qualifying payment and relief. This comprises taxable income. So it says in align the taxable income for the year of assessment, qualifying payment and relief for that year shall be deducted. Correct, right? From assessable income, when we align the taxable income, qualifying payment and relief, we can deduct. The taxable income from each person shall be determined separately. Taxable income from each person shall be determined separately. That is also correct. If there are no deduction for the qualifying payment and relief for that year, taxable income of a person for the year assessment shall be equal to the total of the person's taxable income from the year from each employment, business, investment, and other source. That is also correct. Right. Assessable income, if there is no qualifying payment and relief, same thing is coming as taxable income. The taxable income of each source shall be determined separately. So it's incorrect. Assessable income from each source shall be determined separately, not the taxable income. Assessable income from each source need to be worked out separately. Taxable income from for each person need to be worked out separately. Right? This is incorrect. It says taxable income of each source. So Right, next one is employer is providing his motor cars to employees. This is the employment income related question. It says employer is providing his motor cars to employees. Basically, employees use cars to traveling purpose from workstation to resident place and resident place to workstation. What is the incorrect statement for income tax purpose? This shall be considered as a benefit provided by the employer to employee, hence benefit shall be estimated for employment income. Employment say, example, let's say company is providing a company owned vehicle to its executive staff. They are using that vehicle from, basically they are using from the workstation to resident and resident place to workstation. And these kind of facilities are used to provided by employer. They shall not be part of employment income. These things are very usual, so therefore it shall not be part of employment income. Right? Third one, this kind of conveyance provided by the employer shall be a non-cash benefit accrued to employee. That should be treated as non-cash benefit. As per this one. Commissioner General has the authority to issue a circular specifying the value of non-cash benefit to be obtained from employment income. Because it doesn't say that how to work out that thing, so Commissioner General can issue. He has the authority to issue a circular. So what is the incorrect statement? The thing says, let's say employee is providing his motor vehicle. But vehicle is used by the employee from office to house, their resident place and resident place to their workplace. This thing is says this shall be considered as a benefit. Is it a benefit? Yes. Yes, it is a benefit. So therefore, first one is correct. Second thing is, as this kind of facilities are usually provided by employers, they shall not be part of employment income. Generally, this type of things are provided. Therefore, it says it shall not be part of employment income. So first thing is that we acknowledge that it shall be part of benefit. Therefore, this is incorrect. Right? So other thing is, this is non-cash because there is no cash payment. It's only facility provided by the employer. So it shall be part of non-cash benefit. That's a circular issued by the Commissioner General how to work out. Therefore, we need to work out the non-cash benefit and need to be considered as employment income. So Commissioner General has the authority. He has the authority to issue circular time to time. Last year, they have issued two circular. How to determine or specify the ways to work out the benefit. Right? So the incorrect statement is that. So in case of the employment income, when you are taking any benefits, that means as a reward for the services he provided. Remember, as a reward for the services he provided. You are going to work, you do work there, you render your services to him, and he is rewarding for that service. That shall be part of employment income. Remember why I put that question. So other side it is his, for the employer side it is his expenditure incurred in the production of income. And we didn't come across any section which shows employment cost can be deducted. What is the section apply for that one? What is that? Section 11, general section or the main deduction, expenditure to the extent that it is incurred in the production of income can be deducted. That's why we deducting employment cost or the staff cost when we arrive in the business profit. Right? Therefore, when we work out the business profit, we should know what the amount that need to be considered as deductible expenditure. Right? So it's always for the services, compensation for the services or the reward for the services he rendered employees. So there may be a situation where employer can give some benefit, but it is not part of his employment income because it is not a reward for the service. Right? Simple example, say these days, you know that what the flood situation are there. So employees, some companies, they are giving some sort of the support to the victims. So apart from that, they can give their employee as well. So that is not part of employment income. Why? It is not as a reward for the service. This is doing generally. Right? On behalf of giving to the community, it can support to his employee as well. Right. What does the correct statement describe the domestic expenditure? Where another person is incur expenditure in making a payment to or providing any other benefits to individual, the expenditure shall be domestic expenditure. Where the payment of benefits are included in the calculated income of the individual, such expenses shall be considered as a domestic expenditure. Where the beneficiary who receives such benefit provide consideration of an equal market value of the payment of benefit shall be considered as a domestic expenditure. Even though the amount of the expenditure incurred by the person is so small, low as to make it unreasonable or administratively expectable to account for it, such payment or benefit shall be considered as a domestic expenditure. So domestic expenditure, section 10 says domestic expenditure cannot be deducted for when you work out the total income from business. Domestic expenditure means expenditure made by the individual to maintain himself or another person. Right? Maintain a person. It could be meals, it could be traveling, it could be health, it could be medical benefit, it could be whatever thing, entertainment or whatever thing. Right? Entertaining others. So that could be treated as domestic expenditure. Remember, domestic expenditure is not deductible expenditure. This is disallowable. Right? So the first statement says, he is asking what is the correct statement. First thing says, where another person incurs expenditure in making a payment or providing any other benefit for an individual, the expenditure shall be domestic expenditure. Yeah, that is correct. Where the payment or benefit are included in calculating the income of the individual, such expenses shall be considered as domestic expenditure. So that is not considered as a domestic expenditure. Say, employer is providing means to employee. If that respective benefit is recognized when we work out the employment income, that expenditure shall not be part of domestic expenditure. That's going back to the same what the situation where the employee is providing traveling benefit or a traveling facility. If that particular facility is recognized for the purpose of employment income, then that is not a domestic expenditure. So therefore, this is the incorrect. Where the beneficiary who receives such benefit provide consideration of an equal market value for the payment or benefit shall be considered as a domestic expenditure. So recipient is repaid, is making the payment just like reimbursement of expenses, right? Say just like the previous is one example. So I told you that what is that employees providing meals, but that cost of the meals or whatever it is recovered from the employee when the employee making the salary, then it cannot be part of the domestic expenditure. Right? Second thing is that. Third one is even though the amount of the expenditure incurred by the person is so small, as to make it unreasonable or administratively impracticable to account for it, such payment or benefit shall be considered domestic expenditure. So I told you that the company or the employer is providing tea, right? So very difficult to account how much we have incurred for a particular individual. So impractical. So in such condition, we are not considering that is also as domestic expenditure. This is not a domestic expenditure. Okay? Correct? Any question? So then, question number 10, what items shall be included in calculating a person's taxable income from business for a year of employment? Gain from the realization of capital assets and liabilities of the business. Amount that are included in calculating personal income from an employment. Amounts derived as consideration for accepting or restriction of the capacity of conducting business. Exempt amount and final withholding payment. What is the correct one? A, B, C, A, B, and D. So remember it says assessable income. When we work out the assessable income, exempt amount and final withholding amount we are removing. Why? We work out the assessable income. Once we work out, in Sri Lankan context, Sri Lankan income tax purpose, person who is having taxable income is liable for income tax. Or person who receive final withholding payment. When we work out the taxable income, first we have to work out the assessable income. When we work out the assessable income, we have to remove what is exempt amount and final withholding amount. By final withholding amount, we have to work out separately. Right? So therefore, final withholding amount shall not be part of assessable income. So we are working on the assessable income of person. So therefore, this is incorrect. Therefore, this question is incorrect. Answer is incorrect. A and C. Amount that are including calculated person income from an employment. Then that is employment income, right? Therefore, it shall not be part of business income. Assessable income from business. So that's also incorrect. B, C, and D. Amount that are included in calculating person income from employment is incorrect. C. Amount derived as calculated for accepting or restriction of the capacity of this conducting business. So, exempt amount and final withholding amount. That's also wrong. So then A and D. Yes, anyway, this is incorrect, right? So what's the correct answer? What is it? So this is correct, right? Gain from realization of capital assets and liabilities of the business. That is also business. C, amount derived as consideration of accepting or receiving of the capacity of business. That is true. The business part is there. Then 2 is correct. A and C. So in other you remember, right? Here there it says employment income anyway out. It says increment final withholding anyway out. Okay? Any question? No? The calculation person's taxable income from business for a year of employment, certain deductions are allowed and certain are not allowable and disallowable expenditure. No deduction shall be made in calculating person's income from employment. Expenditure or any other deduction incurred by the person in deriving exempt amount or final withholding payment shall be allowed. Amounts incurred on lotteries, betting or gambling incurred by the person who conducting business of lottery, betting or gambling are to be only allowed for a deduction for such expenditures. Specific provision for expenditure or losses not yet incurred but expected to be incurred in a future year of expense shall be allowed. Question is about in calculate person as the income. So what is the first one? So anyway, first thing is employment income. When we work out the employment income, no deduction can be done. Right? So expenditure and other deduction incurred by person derived exempt amount or final withholding amount. We cannot deduct when we work out the assessable income. That can be done when we work out the exempt income or final withholding amount. So third one says amount incurred on lottery, betting or gambling incurred by a person who conducting a business of lottery, betting or gambling are to be only allowed for a deduction for such expenditure. Is that correct? Yeah, it is correct. So this type of expenditure can be deducted only a person who is doing that type of business. Others also not allowed. This is provision. Provision and make as a reserve. The provisioning are not allowed. Losses not yet incurred for the future losses. Currently, we are making a provision that is not allowed. So, what is the correct statement is this one, right? This is correct. This is also correct. A and C correct. What does the correct statement regarding the main deduction? Sorry. Correct. Incorrect statement, other things are incorrect. Other two, right? Sorry, it should be correct statement. So next one is what does the correct statement regarding the main deduction? Yeah, sorry, it should be correct. Right, correct. But does the correct statement regarding the main deduction? Calculate the person income only from a business expenses that are incurred during the year by the person and if the production of income shall be deducted. Deduction to an expenses of a capital nature shall not be allowed. Expenses of a capital nature secure benefit capable of lasting longer than 2 or more years. Expenses incurred for the improvement of capital assets of a person for any year of assessment shall be deducted. Correct statement is sorry. First one is correct. Calculate person income only from a business. Expenses that are incurred during the year by the person and in the production of income shall be deducted. Correct? Correct. It says he calculating a person income from business or investment. Expenses can be deducted. So this is incorrect. So deduction for an expenses of capital nature shall not be allowed. That is correct. Expenses of capital nature secure a benefit capable of lasting longer than 2 or more years. Capital nature expenditure. Yes, that is also correct. Expenses incurred for the improvement of capital assets of a person for any year of assessment shall be deducted. Improvement? No, it's limited, right? So then this is correct. This is incorrect, right? But the period law says lasting longer than 12 months. 12 months. Says 2 or more years. Says 12 months. This is also incorrect. Correct statement is 2. Clear? Mr. Rani conducting a supermarket. The business has been registered as a sole proprietorship. He has obtained Q bank scheme facility, and during the year 23-24 he has paid interest as follows. What is the amount that shall be allowed in the computation of taxable income from the business? Housing loan interest rupees 200,000. Interest of rupees 800,000 paid on loan for the importation of motor car. This car was gifted to son on his birthday. Interest of rupees 125,000 on the temporary overdraft facility used for the payment of staff salary bill and bonus for the month of April 2023. The term loan obtained for the construction of new store, the interest cost incurred for the year was rupees 550,000. The new store has occupied at the new year the auspicious time on 4th April 2024. What is the finance cost or the interest cost? What we can deduct? Which one? Can we claim housing loan interest? No, it is domestic expenditure. Interest of 800,000 paid on loan importation on motor car. That is also not, because it has been gifted to son. It is also domestic. Interest of rupees 125,000 temporary overdraft facility used for the payment of staff salary bill and bonus for the month of April 23. Yeah, that can be deducted. That is used for that facility has been used for the working capital purpose. The term loan obtained construction new of stores. So that is incurred for the cost. Interest is relevant for the acquisition of asset, for the construction of asset. Interest cost incurred this so much. The stores has not yet been used for the business. It shall be used in the business, in the production of income. They have opened that stores in 24, year of investment 24, 25. This particular year we cannot claim that interest. Right? Clear? Right. Every company has incurred maximum repair cost of rupees 2.5 million and building repair cost of rupees 3 million during the year 23-24. Taxing value of the machinery and building as at the end of the previous year was 12 million and 50 million respectively. What is the amount that shall be allowed in the computation of taxable income from the business? What the amount what we can deduct in 23-24? How much? How much? What's the answer? I don't have that answer. One says machine repair cost of 2.5 million and building repair cost of rupees 3 million. How we need to work out that one? Previous year written down a level and based on the transfer method. How much? Machine written down is 12 million on that. Percentage. What percentage? Okay. Tell me. Huh? Right. Yeah. This is repair. The restriction is applicable to improvement on. So therefore, the entire repair cost can be deducted. So this is correct, right? Entire repair cost can be deducted. Say all machine repair cost, sorry, only machine repair cost, so it's wrong. And that is building the percentage I am correct, right? Because answer is 1. Then what is the correct statement regarding the tax adjustment for depreciation and capital loss? According to the general accepted accounting principle, depreciation of the financial statement shall be allowed. It's wrong, right? Depreciation is provision. Even though it is, we are accepting the financial statement prepared as per general accepted reporting framework, depreciation is not allowed. Provision. Capital allowances are granted in reference to depreciable assets owned and used by the person. Allowance shall be computed on the depreciation basis of the any depreciable asset held at the beginning of the year. At the end of the previous year. So yeah, beginning of the year of correspond. That means the end of the last year. Right? No capital allowances shall be granted for any depreciation in the year of disposal of the such asset. Allowances shall not be granted in the year of disposal. That's also correct. That is correct. Capital allowances shall be granted for any depreciable asset from the date of the acquisition of such asset. No, it shall be all the capital allowances is worked out on balance of till at the end of the year of assessment, not the beginning of the year of assessment. Why says it should be there at the end of the year. So therefore, this is correct. This should be a beginning of the year of assessment. Right? Right. What does the correct statement regarding the capital allowances granted for mode of vehicle? Capital allowances shall be granted to a person in respect of any type of road vehicle. Is that correct? No, it's wrong. Commercial vehicle, bus or minibus, a good vehicle, heavy general purpose, so specialized transport, rail or a motorcycle shall be considered as motor vehicles which attach for capital allowances. Yes, correct. All other vehicles other than a road vehicle designed to carry loads of more than half a ton or more than 30 passengers or the vehicle used in the transportation or vehicle rental business under the commercial vehicle. Right? No capital allowances shall be granted to person in respect of any vehicle. So correct. So this is correct. This is road vehicle. Right? For example, cost of the construction of office building used by the STP Fresh Milk Limited was ₹100 million. Companies engaged in producing fresh milk and supply to domestic market. Building construction was started in the year 1899, completed in the year 2021. The building used for the business in the same year 2021. Based on the above information, what is the amount that shall be claimed as capital allowance in the comparison of taxable income for the business from the business for the year 23-24? What is the amount that we can claim? Capital allowances 20 billion. How much we can pay? 5 million. Or below, this is building, right? Or below 20. Yes, that should be divided by 20. So then 5 million. This is correct. The building over a period of 20 years, right? This is not applicable for this one, but the making industry. This is only for machinery. Most of the budgets of making machinery used by the CW Pacific Private Limited was rupees 50 million. Company indicated production test mill can supply to domestic market. This machinery is the latest technology and most purchase used in the year 21-22. Based on the above information, what is the amount that shall be claimed as capital loss in the computation of the assessable income for the business for the year 23-24? How much we can claim? That is machinery. How much? 10 million. 2. Correct? No. The company is in the business of producing bench meat, therefore no capital allowance shall be granted for the year 23-24. It is. Correct? Correct? Yeah, correct. Why? For a period of 2 years, we can claim capital allowances. So then you would have claimed the 21, 22, 22, 23. Then no capital allowances for 23, 24. Cost of the purchase of machinery used by the RT Aluminium Workers Limited was rupees 100 million. Company is engaged in the business of building, construction, and fabrication. This machinery is the latest technology and was purchased used in the year 21-22. During the year 2020, improvement of the machinery of rupees 15 million was made. Based on the above information, what is the amount that shall be claimed as capital allowance in the computation of assessable income for the business for the year 23-24? How much we can claim? How much? Tell me, how much we can claim? How much? How much? 10 million. 10 million. Correct? Correct. 10 million. So I will have space. Now, further considering 21-22, how many period we can how many period we can claim capital allowances? 5 years. So then they may have taken capital allowance for the 21-22, 23. Sorry, 22-23. And improvement was made. During the year 2020, improvement was made 15 million, right? So then what is the return value? 22, 23, 60. Yeah, 60 is down value. So how much then what is the capital answer they can claim 23, 24? So anyway, first one is incorrect, right? They can claim capital answers for another 2 years. So they would have claimed 21, 22, 22, 23. Right? So calculator. Now you have arrived the answer. Can I show you working? Yeah. Where is it? Oh. No. 20.
1 million is how many?
60 is not correct.
20%. From that only, can you claim that expense?
Yes.
That is 12 million. Not 20% of 6 million. That was it. That will be expense.
Okay. Improvement cost.
Improvement.
Yeah.
Then the land.
Okay.
And 360 divided by 3 years. 386.
Yeah. That should be the correct answer, but that the improvement cost, yeah, has been incurred in 22-23, right?
Yeah.
So, answer is there.
Colombo improve something. That is not there. Those in match.
Yeah, that answer is incorrect. It should be 21 million. So you are allowed another 5 minutes. Because 100 million, we can claim capital over a period of 5 years. So then 122 they would have taken capital loss 20 million, right? 22, 23 they would have taken another 20 million. So altogether 40 million they have claimed. In that particular year they have incurred 15 million improvement cost. How much they can claim? How much they can claim? What is the written down we have to consider? 60 or 80? It should be 80. Previous year written down value. That means written down value as of 21, 22. End of the 21, 22. That is 80. On that, how much they can claim? 20. What is that? So they can claim entirely, right? They can claim entirely. So then there is no added to the depreciation basis. So this year also they can claim this. How much? 20 million. It should be 20 million. So it should be go. So they have purchased the that machinery, right? 21, 22, right? How much? Cost is 100 million, right? Then they have claimed capital allowance. Their return value is 80. That is for the year 2023, right? So in that year they have incurred improvement cost. $50 million, right? But they can claim 20%. They can claim up to 16 million, but the actual cost is 15 million. Therefore, entire improvement cost they can claim in the year 22-23. That is not up to the internal value. So, what is the capital loss they can claim in that particular year? Then another 20 years. And altogether these two they would have claimed in 22-23. So then what is the return value comes to the this year? 16. Then another 20 million as capital loss this year. Right? Ideally, that improvement cost should be 24, 20, 23, 24. 20. But you can work out it this way, right? If it is the case. If that improvement cost incurred in the 23-24, 23-24 na okay. How much you can claim as improvement cost for the year 23-24? Improvement cost, if that improvement cost incurred in 23-24, and how much he can claim? 60 into 20%. 12 million. Up to 12 million he can claim. But here, and here, how much he has that cost? 15 million. So then that's the restriction. He can claim up to 12 million, but the actual improvement cost is 15 million. They need to be added to this one. So which one he has to add to that one? And this year also he can claim 20. Why? Balancing need to be added to the written down only at the end of the year. At the end of the year. Right? So next year he can claim capital losses on that. Right? Right, okay. We'll do another